All right. Welcome back to the Protocol Town Hall, a periodic guest talk series focused on protocols and protocol research. Today, we're talking with Chris Dixon from A16Z, and it will be a different style today, a little more of a Q&A interview style session. Our next session will be in 2 weeks on the 15th of May with Varun Srinivasan. He is from Farcaster. We recently announced the second cohort for Summer Protocols 2024. You can see that announcement on our forum at forum.summerofprotocols.com. And on our website, summerofprotocols.com, you can see research from the first cohort, the protocol kit, and other information about future guest talks, again, at summerofprotocols.com. So with that, I'll go ahead and hand it off to Venkat to introduce Chris for us today.
Right. Thanks, Josh. And welcome on board, Chris. So to give people some background, people in the tech world and the crypto world, I think, don't need any introduction to Chris. But one of the interesting things about this program is that we are trying to broaden the study of protocols. And this year, especially in the new cohort, we have people studying things like shoreline demarcation protocols and fire protocols, things like that. So hopefully we are reaching a broader audience. And I suspect Chris is not known to that audience. So Chris has been an entrepreneur and investor since, I think, about 2007 or earlier. And you've seen in the bio that he's done a couple of startups, and he's known as initially a general partner at A16Z, and then the crypto fund that forked off from that, which he now runs. But I think the interesting thing about Chris is that I would credit him with starting the angel part of the VC blogosphere back in like 2009 or so, because I remember at the time I was in Xerox trying to do some internal startup-y projects, and I was reading as much as I could from Silicon Valley to try and apply those things to internal startup projects. And it struck me that there were like three kinds of blogging going on in the then nascent VC sphere, because at that point only the insiders really knew how to do startups, and it was not an open discourse. So on the one hand, there were like what I think of as the philosophers, so like Paul Graham and Mark Andreessen. Both of them would write these like high-level philosophical things. At the other extreme, there were what I think of as like the somewhat boring procedural type people who would be going on and on about like term sheets and like liquidity preference overhangs, and that stuff is important to know, but it's not why you get into technology. It's like the mechanics of sausage making that you have to know. And I think Chris was instrumental in starting both the conversation at the mid-level of abstraction, which is like angel investing, which is kind of like more of a free-form art than the very structured style that's the VC part, and also kind of like blending form and content. So simultaneously talking about like the mechanics of startups, as well as sort of the content and the big mega trends that you have to keep stay on top of. And I think I should also mention, Chris, you were kind of instrumental in creating the New York startup scene when there effectively wasn't one. I mean, there were investors and there were entrepreneurs, but there wasn't a scene as such. And I think what was the meetup and a couple of other early startups were there, and it was like barely anything. And now there's like a thriving scene. So Chris has, over the last 15 years, I think, sort of like developed a niche in the tech discourse for connecting, I think, macro to micro. I think I first heard of like big models like, Carlota Perez, Technology Revolutions. I think you told me about that one. So connecting macro to micro, and also connecting, I think, process to content, which is what makes tech interesting. If you're purely on the content side, you're basically like me. You're an outside commentator writing about trends in tech. If you're purely process, you're kind of inside and talking about like term sheets. Connecting the two is kind of what makes it interesting. And I think Chris's new book, Read, Write, Own, is kind of trying to do the same thing for the crypto scene, like spark the beginnings of like a discourse where effectively there is none. Like Silicon Valley has a very developed discourse in part thanks to people like Chris that's been going on for 15, 20 years. Everybody knows how to talk the startup playbook. In crypto, there's insiders and like, I don't know, Gen Pop that sees it as like a domain of scams, but there isn't this equivalent of VC discourse. And I think this program, Summer Protocols, is doing one thread of that kind of discourse sparking. We are trying to do the broad version protocols, very broadly considered. And Chris, I think your book especially is sort of like doing the blockchain specific version of that. And I just finished the book last night, and I have to say, like, I wasn't expecting to be, I don't know, surprised or enlightened, because I'd already seen you tweet and do like bits and pieces, trickle out versions of the thesis before. But reading the book, actually, it felt like I had like a whole bunch of tiny little jigsaw puzzle pieces, and it was getting put together for the first time. And I think that's actually kind of interesting, because when I first met up with you guys at A16Z almost a decade ago, at that point, the tech discourse was in the same place. And Mark's Software is Eating the World was kind of like a banner headline, and putting the big picture together around that idea was a challenge. And actually, that was one of the things that inspired this program, I think. And I think, Chris, your book does something similar for the protocol space 10 years later. I should also mention that I think the first time I met Chris, I think 2013 or so in New York in your office, I remember I had just bought my first Bitcoin like a month or two ago. I was purely on what you call the casino side of the economy at that point. But I walked into your office, and I think you had a framed Satoshi white paper on the wall, and you offered to like give me a bunch of like Bitcoin papers. And I refused the offer, because at that point I was like, I didn't. It was an interesting speculation, but I wasn't technically interested. But I think you were trying to like Bitcoin pill me at the time. And I think fast forward to the last time we met, which was 2019 at the A16Z Summit. This was just before I actually started doing my own like NFTs and like dabbling in the actual computer side of the house. I was still in like the casino side mostly. And I think we ran into each other in the hallway, and you were doing like some dinner with a bunch of crypto entrepreneurs, and you invited me. And I was like, I'm too tired. I'm going home now. But anyway, since then, yeah, I've joined this program. So a long history of like interesting interactions here. But okay, let's get started chatting with Chris here. So,
well, thank you for the introduction. That was great.
Yeah, it was kind of fun. I went back and looked at your older blog posts from like 2009 to 12, and I was like, holy crap, I've been reading you for a long time. So reading Chris's blog, it's one of the few continuous blogs like Fred Wilson's and others that gives you a history of like, you know, tech basically for the last 15 years. Yeah, actually, let's start with sort of almost a Web 1.0 line. Like there used to be this line that every Unix shell command becomes, you know, $1 billion or $1 trillion company. So for Google, for example, is grep, and Yahoo could be considered ls, and so forth. And I think when you first tweeted about your book, Read, Write, Own, one of my friends, I think, tweeted something like, oh, this is that same principle applied to chown, so change ownership on the Unix shell. And also your title reminded me of the read, write, execute permissions for Unix files. So yeah, your whole book is built around the idea of like blockchains as a computer. So can you talk a little bit about this analogy between the literal Unix computer and this virtual blockchain computer, and especially around ownership and permissions architecture philosophy?
Well, thank you for the introduction, and it's great to be here. Yeah, I mean, like I think there's a lot of deep wisdom in Unix, and Unix, I think, of course, is, you know, not only an important, obviously, you know, kind of set of operating systems today, but also historically, I think not only pioneered a lot of important concepts, open source software, in a lot of ways came from that community, kind of the principles of, you know, small pieces loosely joined, modularity. I think a lot of, if you talk to the folks who were early internet web people, I mean, the fact that the web was built the way the internet was built the way it was, a lot of that has to do with the fact that those people came from the Unix mindset, right? Not sort of the Windows world. I mean, at the time there was the cathedral and the bazaar, right? There were the two universes, and it was important that the early internet came from the bazaar. And so I don't think it's a coincidence that a lot of the kind of concepts, are kind of, exist, kind of cut across both communities. The read, write, own. So for those who don't know, the read, write part is not mine. This is a common term used in the 2000s. It was also called the Web 2 movement. And the idea, it was just a movement of entrepreneurs and technologists who, kind of coming out of the rubble of the internet crash, 2001 through 4, started asking the question that essentially the internet is great, we all love it, but it's essentially a read-only medium for the most part at that point. And meaning most of what you did at the time, let's say in the 1990s, was go to a website and read things, or maybe type a word into a search engine and read things. There were, submit buttons here and there, but it fundamentally was not, the user was a second-class kind of participant. And so the idea in the sort of so-called read write, and this is what it was called. There was a popular blog, for example, called the Read Write Web. The idea was, what if, and of course the term came from Unix and from file systems, right? The idea was, what if we really leaned into this idea that the internet could be more than that? And that was the beginning of blogging and social media and Twitter and Facebook and RSS and all these other things that we, of course, now take for granted, and it seems obvious. The own part is the idea with the title of the book is that I hope and believe we are entering a new era where not only will we add sort of reading and writing to the sort of verbs that people can do on the internet, but now people can also own things. And to me, that's one of the core, really one of the most important features of a blockchain, is that they enable digital ownership. And so the obviously, sort of pioneered by Bitcoin. Bitcoin is special in that there's no company behind Bitcoin. It's a community-owned protocol. And it allows users to own Bitcoins. And that ownership means, for example, it makes certain commitments to the users, right? It makes the commitment to only ever be 21 million Bitcoins. It makes the commitment you can't double spend a Bitcoin. People can debate, and of course they do, whether that's a valuable set of commitments. You can debate whether you like Bitcoin or don't, but that's a new thing, right? That to me, going back, you mentioned 2013, like there are sort of two ways to look at Bitcoin back then. One was Bitcoin itself as sort of digital gold, this new financial system. And the other is pioneering this new concept of like, wow, this is a thing where there's no company behind it. It's owned by the community. It's a protocol, and it has this concept of ownership. And, I see the next important moment in the history of blockchains as Ethereum. And Ethereum said, let's take that and generalize that architecture, add a, near Turing complete programming language, and allow developers to, play in a much kind of wider design space around this concept of digital ownership, right? So what I try to do in the book is I try to walk through and explain why that matters, and I specifically why that would matter ultimately to everyday people, right? Because I think sometimes in this, in protocol discussions, blockchain discussions, things are very abstract. There's a lot of technical words. Hopefully this came through in the book. I tried very hard. I don't use any technical jargon that's not defined. I try to avoid it. I try to use lots of examples and be very specific and go through internet history. And sort of really explain why this ultimately has very direct consequences on, all the different kind of constituents of all the different people that use the internet, whether you're sort of a consumer user or a software developer or a content creator or a small business or whatever it might be. This, having this new ability to own things is potentially very powerful.
Yeah, I think your efforts succeeded. Like I read the book and I could kind of like see the mapping between the metaphors and non-technical explanations you were using and the technical bits. And you mentioned the bazaar, and the cathedral and bazaar, I think, is one of the early urban metaphors for talking about the internet. from like 1999, and you kind of have an updated version of the metaphor as a through line in the book, right? So cities as the metaphor for blockchain networks, and I was particularly struck by a couple of points you made about like how there's a balance of public and private, and commons is a big theme in like this program. We're trying to like build a commons body of knowledge, so that's a important part of the metaphor. There's the metaphor of like logical decentralization, logical centralization and organizational decentralization. That's also kind of like a city-like pattern. And last year's program, we had several researchers studying cities directly as like examples of protocol systems. So that was kind of like a very useful, familiar domain for people to think about. But building on your urban metaphors of the book, one thing you don't talk about, which I think everybody will immediately think about, is cities today are also symbols of like all sorts of intractable problems, right? Like NIMBYs versus YIMBYs and blight and homelessness. And right now you've got all the protests going on in campuses. So cities are like metaphors of like mixed connotations. So yeah, can you talk about like, do you expect the same kinds of problems and pathologies to crop up in blockchains via the metaphor?
Yeah. So just to maybe talk about the metaphor a little bit. So cities to me, I mean, they're obviously inherently interesting, but I think they're particularly interesting with respect to the internet because a couple of things. One is they tend to be sort of bottoms up, like most of the, you have mayors and sort of, high ranking officials, but most of the development and activity in cities come from the citizens and sort of a network of people, right, who are building and sort of at the edges in a decentralized manner generally, right? And that's sort of the difference between a city and like, let's say a theme park or something where it's, tightly controlled by Disney or something like this, right? And I think, I think that's one of the reasons that makes cities great. I lived in New York a very long time. I love the energy. I love the kind of the serendipity, the just sort of the creativity. And a lot of that comes from that, right? And this is sort of for those who are into the city stuff, kind of Jane Jacobs versus Robert Moses or something, right? Like, do you want sort of big central planning, or do you want kind of this bottoms up, mixed use streets and sort of things growing organically? Cities also have a balance between public and private space that's very important, right? So you have parks and streets, and then you have businesses. And I would argue that, like if you think about, it's very important to, if you're opening a restaurant, it's very important to know that there's certain fixed public infrastructure around you, that you'll have access to electricity, that you'll have passersby walking down the street, that you'll have a park nearby. Like that all, gives you comfort that you can invest in this business, that you'll have this kind of support from the city. But and so that's that enables the business. But at the same time, I don't think we'd want, the pizza shop to be invented by the government. Like there's a role for private entrepreneurship as well, right? And I think in a healthy city, you have a healthy balance. I think of the early web, sort of the 90s web, as having a healthy balance. Like I look at protocols like the web, HTTP, and email, SMTP. These are public resources. Nobody owns those, and that means that someone can build a website sort of like a pizza shop, and they know that that there's not going to be someone in the middle that decides to change an algorithm or take all their money, and so the fact that there was this sort of big public resource on the early internet is one of the reasons that I think you had such creativity and entrepreneurship, right? You would know as Mark Zuckerberg or Larry Page or Jeff Bezos or whoever, that if they built a website and it became valuable, that they would own it. Right. And that also is similar to a healthy city, in that you have an incentive to invest and build something. And so, part of my core argument is we've kind of lost that, that as the internet has grown, and I have a detailed diagnosis of how this happened. As the internet has grown, we essentially have 5 companies now that control 95%. They get 95% of the revenue, 95% of the traffic. That tightly control kind of what content is shown, how the algorithms work, how the money flows, and I think there's a bunch of reasons why that's a problem, but I think among them is the fact that you lose this. It's like having a city that's owned by a couple of companies or something, where you don't have that public infrastructure, you don't have that interplay between public and private, And I think, look, I just see it from my side on the venture capital side. I think, you know, it's just basically, name a consumer internet startup in the last decade that's been successful. It's basically ended a huge, you know, a big line of entrepreneurship, which was creating, you know, internet startups, right? Consumer internet startups, because of this, you have these 5 companies that have so much control. And so I think it's, you know, it's leading us down a path. And I think things like AI, you know, AI is amazing. It's very powerful. There's a lot of promise, but by all signs, it will probably reward scale and, you know, companies with lots of data and capital, and will likely, you know, further accelerate that concentration. And so I just worry that we're going to kind of wake up, if not already, in 5 years and realize that the internet has become like, you know, other industries in the past, the radio, broadcast TV, automobiles or something, where it's not, you know, it's not this it's just this thing that, you know, we're just interacting with 3 to 5 companies all day. And I think that's bad for startups. It's bad for the industry I've worked in for 20 years. It's bad for entrepreneurship. I think it's bad for creative people, you know, who have these gatekeepers, these toll keepers who sort of take all of the money and figure out ways to do that. You know, I just think it's bad for innovation. I think it's just depressing as someone who spent my career on the internet and was always, you know, and was originally enamored by the kind of architecture, the decentralized nature of it. I think it would be sad if we lost that. And I think we're kind of headed that way if we don't do something about it.
So to connect back to the cities metaphor, so it sounds like this would be a case of one of the pathologies of cities would be the cathedral eating the bazaar and the whole city turning into like an extended cathedral zone. That's kind of like what the big platforms would be in your model, right? But to go back to my original question, are there other ways in which like city-like management problems manifest in blockchains as well, or
well, that's another thing is so yes, you mentioned logical decentralization. Sorry, organizational centralization, logical decentralization. So I mean, one of the ways that the interesting things about blockchains, right? So the book is Read, Write, Own. I also sort of map that to there's sort of 3 ways to build networks. And so my argument is, so there's what I call slightly different terminology than most people use, because I had to for the context, but I call them protocol networks, which are things, you know, standards, protocols, HTTP, SMTP, RSS, et cetera, Fediverse. Like those are all kind of, you know, it's a network that's based around a standard where people opt in, software developers opt into that standard, and you create a network. So there's no central intermediary. Then there are what I call corporate networks, which are just like Facebook and Twitter. You have a company that owns it. It's a, you know, it's a autocracy. It's just owned by one company, and they have full control. That's how most of the services we use today on the internet are. And then there's blockchain networks, and blockchain networks, I argue, if designed properly, and it's important to say if designed properly, you can design bad blockchains. This is not some silver magic bullet, right? I mean, it's a tool. It's an architecture, and you can design bad, and there are plenty of bad blockchains, and there's plenty of misuse of blockchains. So just to be clear, like it's not, but designed correctly, I think Ethereum's a good example where it's designed correctly. I think there's things built on Ethereum that are designed well, that are sort of these different governance systems, and designed correctly, you get organizational decentralization in the sense that there's no one, you know, kind of running these systems. They're owned by the community. They're operated by the community. There's no, you know, person who's sort of deciding them the rules and taking the money. But you have things like a centralized state space ledger, right? You can store things on it, right? That's different. There's nowhere to, you know, the Web 1 protocols are stateless. You can't store information. You have DNS, which is a whole separate topic, and I actually have a long section in the book about it. But you know, I would argue one of the challenges that RSS had, for example, and one of the reasons it lost out to a lot of these centralized networks is there's nowhere to store things. You couldn't store your social graph. You couldn't store your, you know, your username. There were a bunch of kind of limitations there. It also, blockchains have the ability to manage financial resources and provide funding and do other kinds of things. And so the argument is sort of, it's this kind of Goldilocks principle where it's, my core argument of the book is it's sort of the best of both worlds. It's the societal benefits of protocol networks, but the competitive advantages of corporate networks.
So speaking of those three variants, what you call protocol networks, blockchain networks, and corporate networks, in the future, do you see them entering some sort of dynamic balance, or is this Goldilocks zone so advantageous that you kind of see it becoming dominant and it becoming almost universal default, and the other two being marginalized?
Well, let me frame it. So the kind of core argument in the book is the internet is a network of networks, right? So you have the internet protocol, the kind of base layer that connects computers. And then what we do, like if you're in my business, for what I've done for 20 years, what investors do, what entrepreneurs do, what builders do on the internet, for the most part, is we build networks, right? The web was a network, email was a network, Facebook's a network, Twitter's a network, Uber's a network, Ethereum is a network. And there are, as I argue, sort of three ways to build networks. Now, there are two ways that, if you believe, and then sort of the next part of the argument is the internet has become increasingly controlled by corporate networks, and that's why it's become consolidated. If you share my values that's a bad thing, and we want to return it to a more decentralized nature. Okay, I think some people think that is a problem, some don't. Okay, but if you do think that's an issue and you do want to make it more decentralized, there are basically two known options. There are protocol networks. So let's go back to the web. Let's go back to RSS. Let's invent new protocols like ActivityPub and these other kinds of things, right? And then the other direction would be blockchain networks, right? And I think, by the way, if either one succeeded, I think it would be a good thing. Like I would be supportive of, some kind of revival of RSS. I don't think, when you think about the future, I think the first question you have to ask is why did these things lose? Like, why did RSS lose out? Because in 2007 or 8 or so, RSS was a serious contender to Twitter, as an example. And when I say serious contender, by the way, just to be clear, people sometimes say, oh, well, RSS is still around. Like in 2007, if you walk down the street and you ask someone if they use social media, first of all, most people didn't. But if they did, there was like a 50-50 chance they use an RSS reader versus they go to like Facebook or Twitter. Like that was actually the way people like did this as end consumers, right? That's very rare today. Why did that happen? Why did those lose? So I have a chapter on the fall of RSS in the book, and my argument is it lost because of, I say, features and funding, because it couldn't keep up essentially, and it couldn't. You couldn't on Twitter. You could do 2 clicks and create an account and create a social graph. RSS, you had to go and set up a server and register a DNS name. Internet services that we use today are heavily subsidized. So I use the example of YouTube in the book, where YouTube, the way that YouTube got popular initially is they gave you free video hosting. It was very expensive to host video. That was funded by venture capitalists, right? There was no way for Media RSS, the competitor, to provide that funding, because protocols don't have funding mechanisms. Web 1 style protocols don't have funding mechanisms. So, so I think you need to diagnose what happened. And then once you understand what happened, and then you see what blockchains are, it's essentially this evolved form of protocol networks, of the sort of original protocols that provide the positive features of those original protocols, but also remove the constraints that kept protocols down. I mean, it's been, and I think just to the perhaps people on this call are fans of the sort of Web 1 style protocols. I would just say to those people, like, it's been since the 1980s that one of those protocols has succeeded, right? I mean, email and the web were created in the 1980s. Not a single one has succeeded in the sense of like, tens or hundreds of millions of users since then. Like, I think the first question you got to ask yourself, if you do care about decentralization, is why is that the case? Why has it been 35 years of failure, right? And I have a detailed diagnosis in the book. I mean, part of it is, I think a big part is when they do succeed, they end up becoming re-centralized. And so, like, for example, for those who were around for it, early Twitter was very much, in a lot of early social networking, were very much discussed and marketed as open protocols. The Twitter didn't have an app until 2011, I think. Like, literally couldn't get an app. They just had a set of clients, right? Just the way that Ethereum is today, right? It was, you didn't go to Ethereum and, like, it was like it was like client diversity and all that. And then they switched. And why'd they switch? Because the logic of, they'd raise money and they had to have a business model and they had to fund servers, and and they, it just sort of, that's where the logic led them. Blockchains have a feature, I like to say, instead of don't be evil is can't be evil, right? So Google's original motto was don't be evil. And I think what turned out on the internet is that, eventually the logic of incentives kind of, corporate incentives kick in all of these cases. And the sort of the architecture reflects that economic reality. The only way to protect against that, I think, is to build a new set of systems that embody these values that we, I think, share, but also have constraints in them. And one of the key features of a blockchain is you can enshrine in code the rules of the system in such a way that they can't change.
I think, I'm seeing from the comments that there's some interesting discussion on that part of your thesis of why the old school protocols failed. And wherever you draw the lines on what you count as success, I think I agree with you that email and HTTP are really the only true unambiguous success stories. RSS is in the middle somewhere. Activity pub in your
go look at Google. So one of the critiques of my book someone wrote was like, RSS is, go look at Google Trends for RSS, go look at the user data. Like it's still around, but it's very niche. It's not.
But I think I agree with your assessments. It's all relative of like a scale. So email, web are definitely successes, and the others are in various degrees of gray zones. And
although but they're under attack as well. Like the data is the usage is going down. Links are getting demoted in Twitter, and Apple's in fights about the spam filters. It's very hard to run a personal email server now without getting spam.
Let's talk about many of these are debatable, but one part in your book that I think is not debatable is the difficulty these open protocols have in like creating funding mechanisms and economies around their core activity. And I think that's one thing blockchains unambiguously have an advantage. And Tim, you want to go down that route?
Yeah, I guess the angle I'm interested in here is we've been using the term protocol entrepreneurship to talk about some of the stuff we're trying to fund and see work. And one of the biggest problems of that is just the sort of value creation versus value capture challenge, where a lot of these open protocols create like immense amount of value, but then it's really hard to capture the value on top of it. And sometimes, the way we do this in crypto is like we add a token on stuff, and that's kind of an easy hack in a way. But it does beg the question of like, should every protocol have a token as the only way to capture value? So I guess, like as someone who funds companies for a living and has experience with all these protocols, like how do you think of like the value creation, value capture trade-off in a world that's like heavier on the protocol side?
So specifically like blockchain protocols, like should they have tokens?
I think like that's an example, but like even in general, like I mean, like Gmail being built on like email protocols is another example. But like like if you're building on an open protocol, whether it's like a blockchain one, whether it's you're creating a new blockchain one, or you're trying to build, say you wanted to build something on RSS today, how should like entrepreneurs or people wanting to like extend these protocols think about like what's a right model for value capture without like making the entire protocol worse?
Well, I think like, look, the web is a good, interesting one where the web, there was no, obviously the protocol itself, people didn't make money on directly. But it in turn enabled, I mean, gosh, like tens of, like probably literally trillions, if not tens of trillions of value. I mean, just look at the market cap of these companies on top. And the other great thing about the web, right, is it's not just, Google's worth 2 trillion or whatever, but there are literally millions of websites of businesses that are, if you go look at like Shopify's data as an example, right? So I think it's been pretty healthy too, right? I mean, you have these huge outlier power law winners, but you have a lot of smaller businesses and other kinds of things, right? So it's been, I think the World Wide Web as a protocol to me is the most successful and important protocol in history. It's like just by far, and has been wildly successful. And you could argue maybe it's too power law or something, but email I think is interesting. It's like email's kind of under serious risk at this point, because it's Gmail is probably, what is it, 2 billion users. Outlook. You just add up it's a very small number of providers. Sorry, Tim, what were you gonna say?
I was going to say, so on the web part, like obviously it's clear that the value capture and creation has been huge. It was funded, by entities with effectively no like ROI target, right? Like they weren't trying to capture value out of the web in like very indirect ways they were, but not, a specific return on the investment. Ethereum, I work at the Ethereum Foundation. We sort of have a similar frame where like we have this money to fund Ethereum, but we're not looking to like maximize a portfolio or anything like that. We give out grants and not like investments. So do you think that's like part of the reason they're successful is almost like a separation between the funder who doesn't expect a direct return, and then everybody else can come on this thing and, build more straightforward companies and projects?
It's a great, it's an interesting question. The early web, because you have obviously, so you had the internet, of course, before with the government, ARPANET, and then you had the web, which was Tim Berners-Lee and sort of the standard design, and then you had Mosaic, Netscape, and actually a lot of what we think of the web, like Netscape did SSL, they did JavaScript. There's a partnership with Sun, I believe. They pioneered cookies, so a lot of the features actually came from private companies. Right. And they were just, so they were, and they, and their business model at the time was mostly web servers initially, Netscape. They were trying to do enterprise web server stuff. Like Google has done a lot, a lot of these other private companies since then have done a lot of things in terms of, sort of helping to scale the web. You have CDNs, for example. There's been this history of the internet of people. If you go back and look at it in the 90s, all these people were saying we're gonna run out of IP addresses, we're gonna run out of bandwidth, and there was always this kind of like apocalypse doom scenarios. And then every time we got around, why didn't we run out of IP? Part of it was IPv6, but it was also DHCP, and just like all of these kludgy hacks along the way. The people just kept layering on new kind of innovations. CDNs were important. Originally Akamai, now things like Cloudflare, right? And so you had a lot of private industry around it, and I think that goes back to the incentives, because you knew the web is open. You knew, as a CDN, if you build it, because you basically had like, you have the sort of net neutrality, which is about the transport layer, right? That's about the physical transport layer, and that, whether you have a law or not, that has held in the sense that infrastructure providers have been neutral with respect to what bits you send. And then you had the sort of the application protocol layer, the web layer, also neutral. And so you just had this very strong incentive to kind of build on top, and then for people to kind of give back to the community and work with standards. You did have attempts, again, this is ancient history, but like Microsoft, if you ask like like I've talked to my partner Mark Andreessen about it, like one of the reasons they rushed JavaScript out so quickly, it was done in like a couple of weeks, was Microsoft was coming out with their own competing programming language for the web. And Microsoft's strategy was, their strategy was embrace, extend, extinguish. This came out in the court documents. So the idea was, they were very clever. You don't try to kill the protocol. You say, hey, that's a great idea, let me add something to it. And they were going to add a programming language, of course, that was Microsoft specific, and then start extending it. And then next thing you know, it's like Microsoft's thing, right? So there were attempts like that to subvert it, but I think the momentum on the other side was so powerful. So those protocols, SMTP and HTTP, is interesting because they just, all they did was just said, we're going to guarantee that we'll never extract money at the protocol layer, because it's just, there's no one to extract the money. And then we're going to rely on the incentives of people of both nonprofit and for-profit interests who want to build on top, because they know, because that assurance gives them confidence that they, if they create something, they can capture enough of the value. So that's kind of how I see that era. And then look, in the blockchain era, I would say, I think that you need, you just fundamentally, like at the Ethereum level, I mean, Tim, you'd know this far better than I would, but like, you just fundamentally need, I don't know of any design for permissionless blockchains that doesn't have a token at the infrastructure.
Yeah, and we're designing, internet money, so it makes sense that there's
So I think it's unambiguous with Ethereum. I would argue at the application layer, so like Farcasters on top of Ethereum, Farcaster and things. I think that the community has overdone tokens, that like we should see more systems without tokens. This is not going to make me popular on crypto Twitter, but and by the way, I say this to entrepreneurs that we invest in, like we would be happy if they pursue other things. And specifically, like I think of it as, and I have a whole bunch of stuff in the book on it, but like there's sort of the token incentive side of tokens, but there's a very important thing about blockchains, which is composability, which really has nothing to do with tokens, which is the fact that you have assurances that you can build on top, right? That there's sort of the API, quote unquote, is guaranteed to never change. And that, for example, to me is like a very powerful thing about Farcaster. It's built on Ethereum. It can't be evil. The rules are baked in. And that means you can, as a developer, build on top and know that you don't have platform risk. You won't get rugged by the platform, right? I was just doing a book tour. I was actually at Denver, and I signed books. And whenever I'm signing books, I ask everybody what they do. And I met a number of kids, college kids. I was very excited about it. When I asked them, what are you doing? They said, we're building features on Farcaster. Like I'm building for Frame on Farcaster or whatever. And I was like, oh, that's interesting. Why are you doing that? He's like, well, I wanted to build a social network, but to build a social network today, you have to go have $1 billion or $10 billion, to compete against TikTok and Facebook. I probably can't even do it with 10 billion at this point. But now I can just build a feature of a social network, right? And so you can get the same effect you have on open source software, right? But now you can do it on the service layer. You can now build open source services with a community kind of composing it. So, and I think you could have, to your question, Tim, I think like on a situation like Farcaster, you could imagine a world that they don't have a token. There's no token there, but people have the same incentives they had in the Web 1 world, just like you building clients, you build a Farcaster client and you charge for it, or you put ads or whatever I don't know, whatever you did in the way you do in the current web, right? Yeah. But now you've got it's sort of in a way it's like RSS with state, so that you can store the social graph. I have a part in the book where there was an article in Wired from 2008 where they tried to build an open social network, and they went through all the different steps, and then the one thing they said they couldn't do was they had nowhere to store the social graph and the namespace, right? Which of course is exactly what a blockchain lets you do now, right? Is you can store that information in a way that is not controlled by a company, right? So that in a lot of ways was the missing technical component for building a truly open sort of stateful RSS. I think of a lot of what these sort of, anyways, so that's, I could go on and on about this, but I think to your point, I think there's a lot more design space to be explored here, and including things that I think an important thing will be to definancialize a lot of this stuff. Has been way overly financialized.
And I guess, on the note of the funding, so one thing, that's interesting about Ethereum. So Ethereum has a token today, but at the time, its funding structure was quite unusual, right? Like it wasn't selling equity in a company, and I believe your firm was even pitched about it. And like many VCs, you effectively like legally couldn't invest in this thing. It was like a crowd sale online, and a bunch of VCs ended up investing personally. And today, this is kind of taken for granted. You can sell tokens in a bunch of ways and raise money that way. But I remember when the initial crowd sale happened, it was listed in Wikipedia as like the biggest Kickstarters. And there was like some fancy cooler, and Ethereum was like number 2. And that's kind of where it appeared on the internet. It wasn't on like the TechCrunch, VC raises. It was just like the random
coolest cooler. That was the Kickstarter.
Yeah. It was like the second biggest online crowd sale after the coolest cooler. So I'd be curious to ask you, like, are there some interesting just like funding structures or financing structures you've seen in the past couple of years that sort of fall outside the norms of like, like a traditional like equity raise, a traditional like token raise that you sort of wish you would see more, or stuff you haven't seen anyone do yet that you sort of wish you'd come up with?
Yeah, I mean, like I was a personal investor before I was at Andreessen Horowitz and Kickstarter in 2009, I think it was, and I've been interested in these kind of crowdfunding for a very long time. Like I've always felt like, and this is just me completely riffing. This is not Kickstarter or anybody else. This is my own views. Like I always thought like Kickstarter, for example, should get like, okay, it never made sense to me. Like a lot of local businesses, as an example, if you think about how they get funding, you're starting a restaurant. Most restaurants go to the bank. So you walk down the street, you go to Citibank, you fill out a form. Citibank knows probably nothing about you except they find out your credit history. You're starting a Thai restaurant. They have no information about whether the neighborhood needs a Thai restaurant, right? There's no demand signal. There's no nothing. They give you some interest rate. You you hopefully get a loan. Most restaurants run at like a 3% margin. They have a very high bankruptcy rate. I think the average lifespan is like 2 to 3 years because they're getting the rent jacked up, and it's hard to predict demand. And then meanwhile, you have all these people around who have money and want a Thai restaurant. Like, why aren't more, for example, local businesses crowdfunded? Like, why? So, you've seen some people play around with it where they do like pre-sales. And actually there's a blockchain based company that we're involved with called Blackbird that's experimenting with some of this stuff, right? Where you can sort of like pre-sell people, like basically like a balance at the restaurant. You can buy it ahead of time, and then maybe you get good seats and other perks or something like this, right? But why not get the financing from the people as opposed to from the bank, right? And one would think that the internet would enable things like this, right? Because before the internet, you didn't have a way for all these people to get together and aggregate their demand signal, and now you do. That hasn't happened. Look, it's very complex. The regulations around anything touching financing is extremely, complex or / burdensome, whatever you might want to say. Like, the reality is that essentially that there's some exceptions. There's a thing called Reg CF for regulation crowd. This is the U.S. laws for doing non-accredited investor, but essentially it's illegal for non-accredited investors to invest in anything that's not, a public stock or bond. That's just the basic, outside of these exceptions like Reg CF, which is rarely used because it's incredibly cumbersome and complex. And so what happened, like you mentioned, like the Ethereum stuff, what happened then in the crypto world is everybody moved to selling to VCs, and we get a lot of shit for that. And they're like, the VCs do it. Look, it's like this is the law. I mean, this is the rules of it. So I think the challenge is, how do you innovate in this space in a way that's compliant? And, I think that there is, some interesting stuff to do. And I think particularly around kind of like pre-selling and other kinds of things that aren't equity like. But that is the big kind of huge challenge. I believe a lot of these funding mechanisms that we use today are broken, and particularly the reliance on debt. People talk a lot about venture capital, like, in the news and things. It's like 0.01% of funding in the world. It's tiny. It's just tiny. It's nothing. Like, when you compare it to other forms of equity, stock markets, and then particularly debt. Most funding in the world is debt, right? Almost all businesses are funded by debt. If you just go down and walk down your street, those are all businesses funded by debt. So, right. So that's, to me, it just intellectually, one would think like equity is a high information financial instrument. Debt is a low information financial instrument, right? So like, it's always the way like it works when the debtor just wants to know, will they go bankrupt or not? The equity financer wants to know, how big can it be, and all the nuances. And by the way, this is reflected if you do private equity. The debtor will just be like they'll just be like more check the box diligence. The equity higher in the stack will be much deeper on sort of the opportunity size and the customers and everything else, right? One would think in an internet world that we'd be moving to a higher information forms of financial products. But that really hasn't happened. I would argue a lot of that is because of the rigidity of the regulatory frameworks. But anyways, I feel like I could go on this topic. I want to show.
Yeah, I think there's a bunch of
things
here that we could all I had a whole bunch of other questions prepared that we won't have time to get to. But I think in your book you actually trace this historical arc of the limited liability corporation in its time in the 19th century was a huge sort of financial innovation because it greatly expanded the number of people who could participate in wealth building. And I think we are on the cusp of another big breakthrough like that, where it's another large increase with like increase in noise and risk, of course. But I think we'll forego the rest of our questions, so we have time for questions. I think we have a bunch of people backstage as well as on YouTube. So yeah, over to you, Josh, to curate the Q&A.
All right, thank you, and thanks, Chris, for answering those questions. Anybody out there in the YouTube world or here in the backstage have any questions for Chris? Been lots of great conversation in the YouTube, but nothing specific on the question front.
Uh,
So
I have more I queued up. I think
yeah, let's do it.
If more come in. So one I did want to ask is, in this conversation, you kind of like walk back a little from like too much tokens, but in the book, you kind of like argue that tokens are sort of like the load-bearing abstraction for like doing basically everything. And yeah, computationally, architecturally, they seem to kind of have that like a generality of a purpose. But one of the things that I've been thinking about is there's this great line by Fred Pohl, the science fiction writer, that the job of the science fiction writer is to predict not the automobile but the traffic jam. And already my wallet is a mess. I'm like on 6 different chains, and I have to use like 4 different bridges across like Base and Optimism and Ethereum, and then of course Bitcoin is its own world, and then there's all these like channel pass NFTs and PO apps, and it's like if I were to imagine a physical wallet like this, it would have like way too many credit cards, way too many identity cards, way too many foreign currencies. So this seems like a traffic jam that's emerged here. How do you see the user experience of blockchain networks getting past this traffic jam situation?
Yeah, I think I think that's a lot of that can be solved with better software and software abstractions. And so some of that is happening at the protocol level, which Tim would know much better than I do, but account abstraction and all of that. I think on the wallet side, like I just tried out the new version of the Coinbase wallet, and they group, they basically abstract away the networks. So whether you're on, Ethereum, L1 or Optimism or Solana, it's just sort of, you have a basket of NFTs. So I think you can do a lot with software. I think ultimately, if this works, it will look a lot like the current internet. The only big difference will be people will have a sense that they own things, that they have an inventory. Right. And they have an inventory of things that they can bring from, and that inventory could be game objects, social networking identifiers, cryptocurrency. They could be data, things that represent their data.
Is the wallet metaphor like big enough for this, or is it too skeuomorphic and will kind of break?
Yeah, I mean, the word wallet's terrible and trips up all these, like, just suggests all these, it's financial and trips up, it makes it sort of a hotter issue from a regulatory point. I mean, really, it's like it's like your equivalent of a browser, but for, and it ultimately should be something where you just sort of have an inventory in your browser, and not, wallet suggests, kind of connotes more financialization or something. But I think that's the only thing that really has to be ultimately exposed to the user, is just a sense that they have things that are persistent. I think everything else can and will be abstracted away.
I think Dorian has a question in YouTube. Josh, can you throw that up screen?
Yep. Dorian's question here: are you envisioning something like an RPG, like Diablo? I'm imagining in relation to the wallet. Is there room for the metaphor to change?
Yeah, I don't know. Yes, I mean, so the specifics of how, like in Diablo, I haven't played in a while, but I think you have like, it's like a role-playing game where you have like your sword and all the other things. I think something, similar to that, of like a persistent inventory. So, so like, I own my Farcaster name, and I own my social graph, and I can switch from Warpcast to another client, right? And I can take that with me. And maybe it doesn't even have to, like, the visual representation, whether it's sort of a wallet or something that maybe you trust a Coinbase to custody it or something, and it's cloud hosted, but the sort of legal and cultural expectations are it's yours, you own it, as opposed to it's owned by, right now, everything is owned by the application providers. You go to a new app, you start over every time, right? And all the data you create, all the, identifiers, the social graphs, everything is owned by the service and not by you. Wait,
Josh, you're muted.
Oh, yeah.
Excuse me, muted. Yep, thank you. question from Lee Gong in YouTube asking, what makes you choose Farcaster over other decentralized RSS projects? What are the important factors that you take into consideration?
Well, look, I'm biased in this case because I've known Dan Romero for a decade maybe, and we invested in Farcaster. So, I'm admittedly I'm biased, but I'm glad that there's Lens and other projects, and I hope they succeed, and I hope, I hope that maybe these things all interoperate, and I don't think any kind of category like this will succeed with just one project. And so I hope there's multiple and they get momentum, and that, ultimately the real competition is Facebook and these kinds of services, not each other. So yeah, I mean, I think that Farcaster made some good choices, and not to say the others didn't, but I think specifically kind of building up an early strong community. There's a common pattern, sort of failure pattern in technology, to sort of build a platform and then hope that sort of the users will come. And so sort of there's always this trade-off when you're trying to build a platform of how do you do it? Do you build a platform? Do you build an application and then build a platform? Do you build a community of users? Do you go for developers first? Like, there's all this kind of ordering questions, right? And I think they just have done a good job kind of first getting, couple 100,000 kind of, crypto folks, but kind of more of the builders. If you spend time there, it's really kind of building oriented, not price oriented. And that just has a lot of overlap with the types of, software development you want, right? A lot of those people are building things. So I just meet a lot of people now who are building on Farcaster, and I expect you'll see just a wave of good developers come on there. I think the interesting next phase will be, I think that there's, in my experience, there has been waves of excitement around kind of composability, around developers discovering new platforms and getting excited and building around them. I think we've been in a 10-year kind of drought of that for the most part, on the internet side of things, on the service side of things, because we've been living in this very centralized era with Apple and Facebook and others dominating. But for those who were around, like 2007 to 9, there was the major area of venture capital, like startup, like in the same way everyone's building an AI startup today or something, everyone was building apps on top of Facebook and Twitter. Like there was this really big momentum around it. And what I'm hoping is we'll see a similar kind of thing in the next couple of years, of people building on top of decentralized blockchain-based social protocols, right? And building around it. And you get this army of people building in this composable, decentralized way, that ultimately build better software than these big companies. So it's, classic kind of bazaar versus cathedral.
Awesome. Thanks so much, Chris, for your time. Really appreciate you taking some time out of your busy schedule to chat with us today. And for all of you watching on the YouTube and elsewhere, we'll see you all in a couple of weeks for a conversation with Varun from Farcaster.
All right. Thank you all. Appreciate it.
All right. Thanks, Chris.
Chris.
See you all.
Chris.
Thanks, Venka.